And so today we have another very special episode with this man who's sitting here in front of you. His name is Alvin Cavalier. He's owner of a short-term rental company that provides property management, sharing economy services called consultations, STR consultations, STR rental market research, analysis reports, STR listing management. So there's a lot that this man and his company is providing. Visit the website yourspacestr.com. That's yourspacestr.com. He's also an organizer of Airbnb rental arbitrage meetup in Atlanta, Georgia. So any of you who are looking to get involved into Airbnb business, how often do you do these meetups?
There are right now about once every 2 months in Atlanta, and in all actuality, monthly across the country. So we're scheduled out in Dallas, Houston, we'll do Miami and Nashville here in the coming months, and DC, I think, scheduled for 3 April.
Here you go, guys. So, anybody who's from the States, because again, you're probably not planning to come to visit Europe so far. It's going to be, so again, for the European people, this is the interview that we're going to be dropping, to learn the tricks, the ins and outs of Airbnb business. Because I know it's super popular in some parts of the world, like London. I know there's a lot of people doing Airbnbs in there. Dublin, again, France, probably Germany, all over the place, especially like young people, and like your age. And so it's a great space, and I'm looking forward definitely to jump on that. But before that, just a big thank you, staying here with us for these 30, 40 minutes. Appreciate the time, Arlen.
My honor. Thank you.
Thank you. So again, for the people, maybe you can tell a little bit of your story. Again, prior to starting this interview, you mentioned that you're still active in the military. So
Yes.
Maybe you can tell the people who would love to get involved into the business, like how do you manage like full-time job and still doing the business, and like how did you discover this real estate business in the first place?
Sure thing. So everybody, again, Alvin Cavalier, active duty military, still is my day job, and short-term rental, sharing economy, consultation services by night, as I call it. This started actually a little bit about 2 years ago, March 1st, 2018 to be exact. First short-term rental acquisition, actually out in New York City. That came about through a real estate agent, a good friend of mine who was doing Airbnb, had some opportunity, took a look at some numbers, and then it was just about accepting risk based on opportunity that was there. So to peel through everything, the numbers made sense. So then I went ahead and did an acquisition on her behalf. Went into a partnership that lasted just about a year or so, and then after that, just quickly started to expand out throughout the states, and reached about 50 or so Airbnb investments in just under 2 years, and we've now spread out into quite a unique space that you probably won't hear much about as it pertains to Airbnb, but it's a shared economy of look and feel as a whole with our Airbnb efforts. And what that entails for people, it's simply a look at the sharing economy and all the services that exist in the sharing economy. You've got Turo, you've got Peerspace, you've got RV Share, BoatSetter, you've got Zale that provides mobile massage services, you've got Feastly that provides chef services. So you think about all of those services that exist, and then you figure out a way to tie those into a workflow and a process that allows you to add value to a guest experience. So as we see it, we get out of the 9-to-5 rat race within just being able to provide an Airbnb for guests, and we monetize other areas of the sharing economy. So the conversation changes from nightly occupancy rates to providing guests with a holistic experience within the shared economy. So
Yeah. It's completely a different business. Like prior to itself, I used to have people, again, you guys who are watching familiar, like multifamily, like investing construction. So that's a little bit different. Like you provide the service for people. So that's a little bit different. And I'm like, when it comes to your Airbnb, like I'm very green, like, and probably some of you who are watching, they're like, I don't have a clue what like Alvin is talking about. So again, people like myself who are green in this space, like they don't know anything. Like, how do you even like get, because you mentioned you have 50, what do you call it, properties like that you manage, or you partially own them? Like, how is this structured?
yeah, so I'll try to simplify it.
Yeah.
So 50 plus investments, meaning that my company, we have invested in 50 or so Airbnbs. Now, some of those, or a majority of those Airbnbs, were invested in and kept into our inventory in one shape, form, or fashion. Some of the others were strictly from a consultation standpoint, where we have brought in investors and taken them through an end-to-end process. And then some of those investments were strictly turnkey efforts, which is something else unique that we do. And taking an Airbnb, standing it up from start to finish, and then we will provide it out to investors, or offer it out to investors as sort of a turnkey effort. Same conceptually that happens in real estate. We just do it on the Airbnb side. However, that's only done for a short period of time within a long-term lease agreement.
Got it. Okay. So, I mean, it's possible to get the investors in some of those deals, because it sounds like, I mean, are you able to like to raise money to like buy some of the, because again, you just put a lease in place. You don't actually buy any of these properties, right?
Right. Now, the whole concept of rental arbitrage, it's really to take on a lot of units, and we do that. Again, I think not to pat ourselves on the back, but a pretty unique concept within our structure is we offer long-term lease agreements, and at a minimum 36 months, max out to 5 to 7 years in some cases. And what that allows us to do is leverage the terms of the deal to get the numbers we want and the timeline we want. Because as we see it, all homeowners have problems. If you deal in real estate, you understand that rental and tenant inefficiencies exist. So understanding the fundamental problem, we just exist to solve that problem. And that allows us to offer homeowners something that will stabilize their units, reduce their tenant inefficiencies, reduce their vacancy rates, and then they can focus on building equity and appreciation in their assets, and we can focus on running our business.
Yeah. Okay. Got it. So you, the main thing is what you do is you provide the property management. Is that right?
Yes, and that's another perk. So that's internal also to the deal. So that in essence sounds like to a homeowner that, hey, I'm going to offer you a long-term lease agreement that's going to help stabilize your unit, and then we're also going to manage your property. And that's really just due to the inherent nature of short-term rentals, right? Because you can have a guest coming in the same day. You may have a leaky pipe or broken appliance, but you're not going to let a broken stove impact a 21-day stay. And on the flip side, if something happens while the guests are there, you want to action it immediately, right? Because you're providing guest services. So ideally, you become inherently tied to property management services. So you offer that as a perk, which then tells the homeowner, hey, I'm going to, in addition, save you between $1,000 to $2,000 a year, because I'm going to manage the property. You'll still have full-time access with smart technology as you would with a long-term tenant. And quite frankly, we're going to take care of the property and keep it in much better shape, just due to the inherent nature of reason short-term rentals exist, and they're able to be successful because they have to maintain a certain standard.
Okay, got it. So how big is your property management company?
When you say big in terms of management,
Yeah.
every unit that's in our portfolio we manage, and then also we have units for other investors that we take on. So I would say somewhere around 30 to 40 units that we currently manage.
Okay, got it. And I mean, is it, because when I look from a perspective of having an Airbnb business, like, I don't know, again, it's for the uh, girls and boys who are looking to get involved into the business, because I've seen some photos like floating on the internet, and I know it's like, it's just probably a few percent, but I think is it not too much? Like, is it turnover is not too big? Because I think when people come in and they just rent the place for 1-2 days, I just feel like they're gonna just trash the joint, you know? Like, so is that happening a lot, or like, so is it like a lot of expenses going towards Airbnbs? Like, what these homeowners are facing? Like, is it a big issue?
In some cases, yes, but over time, we found ways to mitigate that, right? And what we found is through Airbnb and VBRO on the way, you have house rules, and what happens is guests have to agree to your house rules in order to rent your place. So those house rules in a sense become a binding contract. And if you look at it that way, then it changes the dynamics in terms of risk mitigation for things like that. So our house rules are very long and robust, and what that allows us to do is tell guests, hey, we allow events. You can stay 1 day, but you're going to pay for it. You're going to have a pretty expensive security deposit in order to host that event. And then, oh, by the way, if there are damages, we're just going to hold the security deposit and then file a claim against you. So having robust house rules plus insurance allows you to mitigate and offset a lot of the risk. And then also tied to that, security, especially for homes, because we deal with a lot of 3 and 4 bedroom homes in our portfolio. So having outdoor security is a must. So together, those help mitigate a lot of risk. And I tell you that I've only had one incident with almost 550 or so guests over 2 years. One incident where we've had something taken from one of the properties, but by and large, small accidents with kids happen. But everything else really gets back to understanding your operational cost. And to your question about some of those concerns, every host that's operating professional, in my opinion, should account for that in some capacity through their monthly expenses. And then we understand that gets you into your average daily cost. And if you're pricing right and not just pricing based on aggregated market data, then you can price nightly to account for some of those potential future expenses. And in a sense, what happens is you pass that cost on. So over time, as income's rolling in through your net profits, you've accounted for potential losses over time. And that's not a risk mitigation, but it's to say that, hey, I know some of these things are going to happen over time, but how do we best prepare ourselves to mitigate that, not only through some of the things I've talked about with house rules, but also through charging guests, every guest that comes through for a future turn.
Okay. So, like, what's the process when it comes to your business? Like, how do you find these potential you know, clients for you, like that you can help and like manage these properties and just run the Airbnb for them? Like, how do you put the contracts in place? Like, how does it look like? And I mean, how do you screen maybe we start, like, how do you find these people? Like, what's the process for that for you?
Right. So I'm going to spill the beans here, right? So big picture, right? We operate under four buckets, as we call them. There's source, build, manage, and then it's either sell or lease. So in the source bucket, that's where we go into the acquisition phase of short-term rentals.
Mm-hmm.
And we do that in a number of ways. Primarily, we target real estate investors, and ideally it's through Facebook groups and local real estate meetups and meetup.com, where you can go and join local meetups and then provide some information in terms of your services. And the reason we typically choose real estate investors for those that do buy and hold, and they look to stabilize their inventory. Getting a long-term rental to a short-term rental investor is a gold mine. And then what happens is once you do one or two good deals with an investor, then investor friends come calling because it's a fairly good deal. The second mode is we look for homeowners, and simply through a website called HotPads, and another website we use, Military by Owner. And the reason those two websites are chosen is because they have a for rent by owner filter, which then allows me to do some light market research through Rental Meter or Zillow to understand some of the market dynamics and average rental prices. And then we set those filters into the website to get the exact location, the budget range that we're looking for. And then we hit the filter for rent by owner, and then it gives us a target population. And then we've got an email script tested and tried that's been successful over 25 times. So we shorten that down to about 2 paragraphs that gets to the heart of the message to tell homeowners, hey, listen, I understand that you have rental intended inefficiencies, and I'm here to solve that for you, right? I'm going to give you a long-term deal, and I'm going to manage your property and think about it and come on over. But in any event, 10 or so emails will go out, and then typically we'll get 3 to 4, sometimes 5 responses. And as that happens, as we see it, homeowners are then, in my football analogy, they're on the 10-yard line, and now we've just got to figure out a way to get them across the goal line, which then becomes an easy discussion to shore things up with. We got a short explainer video. It's about 2 minutes on my YouTube channel, and it thoroughly explains the process of what we do for homeowners. And then also I've got a follow-up email that goes out that talks about some of the frequently asked questions that homeowners typically have with respect to short-term rental business and my home, and how does that work for me over time.
Mm-hmm. Yeah, I mean, you know, I love that, by the way. I love it because, again, to have, like what you mentioned, 50 properties, 50, you know, that you have 50 something, right? So to get to that scale, to that level, what you mentioned, the like processes and systems in place. So, I mean, it's phenomenal. I love it. I love it because, you know, you have a solid like system in place to make sure that you will be able to find these homeowners. Like, and I see definitely the side of, getting, you know, getting it, you know, the property on Airbnb rather than, you know, leasing for 3, you know, putting a lease contract for 3, 5, 6, whatever year. Because I mean, you know, when you have people just like yourself, that means I don't have to manage my own properties anymore. Of course, right. I don't know, like the way you structure the fees and how much it's probably, you know, on the contracts, depending on like a lot of variables. But you mentioned one thing, you know, and that caught my attention. You said it's kind of a gold mine. Sure, like renting short term rather than a long term. Is that correct?
Oh, absolutely. It's a gold mine. It just, I
Yeah.
mean, from an investor standpoint, and I'm not sure if you manage real estate or not, but if I gave you in one hand and an opportunity to rent every 12 months to God knows who, and on the other hand, I give you an established company at this point with over 50 investments that's going to stabilize my home for the next 5 years, and because we understand markets and needs of investors. I may rent your home at market rent, but every 12 months we're going to look at market appreciation and have an investors discussion on cost sharing if we're going to give you a little bit more money every month based on what you could potentially get in the market. But that at the end of the day, offering value and stabilization is key because nobody wants to deal with vacancies.
Yeah.
That's money down the drain, and that becomes a big part of why this becomes a gold mine for homeowners.
Yeah, and like, when it comes to the return, like money wise, because again, when you rent stuff, when you rent the rooms, the apartment, the houses, short term, let's say for a day, how much is approximately? Because let's say if I have a like let's say apartment for rent is $850. So if the same apartment is going to be rented for like day-to-day basis, like for 2 days, 3 days, like how much is that going to be? Let's say if it's a nice nice apartment, city center somewhere, like I don't know, pick a state, like any state. Of course it's going to depend like which state and like but what city, but how much is that going to increase like percentage wise, like on the return that I'm getting from rents? Is that gonna, because again, when you rent, like, because you may mention the vacancies, when you rent for like every single day, is there the vacancies? Because I thought like the vacancies will definitely increase, because I mean you always have to fill up with people, and there's already, you put a lease in place for 3, 5, 6 months, a year, and this person is going to be living there for a year. Like maybe he's going to move out in the process, who knows, but he's always there. But in this case, like people come in for 3 days and they move out, and like so my concern, because the vacancy will go up, but you're saying is opposite.
Right. So I think the part that we missed was homeowners get market rent. So in a sense, they get that every month. So I am their long-term tenant.
Mm-hmm.
So I am stabilizing their unit by giving them rent regardless of if I make profit doing the business or not.
Okay, got it.
So the vacancy that comes along with short-term rentals, that's solely on me in the business. So if I have, in worst case scenario, if I'm occupied 50% of a month, then I may not meet my monthly profit margin expectations, and I may eat the cost. But either way, the homeowner will get rent on the first of the month every month for the duration of the agreement. Now that becomes a scary proposition for some. I've had investors and they've quite simply backed out. It's like, well, I don't want to take on a 3-year lease agreement because all the what ifs come out, right? But
Mm-hmm.
then we get into a different conversation, and that's where I think some of the uniqueness about what we're doing in the shared economy space shores up a lot of investor concerns with taking on long-term efforts. And then we also have a pretty unique pricing program that it's under our partner host program, and as we see it, so co-host is the word we typically hear, and co-hosts help you manage, right? And partner hosts, we aim to help investors grow their business. So that's strictly from a profit margin occupancy standpoint, where we sit down with investors and we talk to them about target profit margins, target occupancy rates, and how do those impact and feed your daily rates, right? So as it pertains to occupancy, in a perfect scenario, we're looking out and we are priced at a 30% profit margin target and an 80% occupancy rate target, right? So we're expecting to only hit 80%, but we're priced efficiently enough where those numbers will pay our bills and still get us to a 30% profit margin. So in a perfect scenario, when we look at the way we price and our pricing structure, then the 20% vacancy that we're going to account for is already planned for in the pricing structure. So we're okay with that, with taking on that risk of having that. But this all comes back to understanding numbers and being able to price professionally to get those results you want. And then in addition to that, what happens is from an investor standpoint, everybody's looking to grow a business. So we change the dynamics of the conversation when we're looking out 6 months out. The conversation sounds like where are we priced at a profit margin standpoint per night 6 months out, and it may be at 130% profit margin. If somebody books a night, I want investors to know exactly how much money they made per night. And then what does that mean for an occupancy rate if they book 6 months out? Because then if our target occupancy rate is still 80%, every night that's booked 6 months out, it allows us strategically then to start to plan against protecting our profits, right? And then the closer we get into that time frame, what happens is we can leverage protecting our profits by then starting to drop rates to maybe a 10-20% profit margin to offer a guest, right, a lower rate value in the home that they're getting. But at that point, as an investor, we're just looking to protect profits. And you may look at our listing and say, well, how can they be in the prime market, and price below market rate? But the devil's in the details behind the structure, and understanding that we've hit our profit margins over and above, and now we just want to protect that, right? So how do we do that, right? Then we're able to shake the market a little bit, and then achieve those occupancy rates. We protected our profits, and then we're focused out.
Man, I have so many questions right now because you just laid out some, great chunk of, of great information. But first of all, before I'm going to forget, the question is, what about, cancellation rates? Because again, people are booking in advance, and like percentage wise, how many of these people are canceling the bookings, and how is that affecting the overall, occupancy rates and the returns?
Yeah, great question. And quite honestly, I don't see many cancellations, honestly, only in the Columbus, Georgia market where I currently am. And that's just due to military families that are coming in for graduations. There are last minute changes sometimes with the schedules, and that causes a cancellation. But 9 times out of 10, those families will rebook on different dates as those dates change. But otherwise, I'd probably say less than 1%, even across all the different states and cities that we operate in. Very, very low cancellation rates. And in most cases, we have a moderate to strict cancellation policy. So anywhere in a 7 to 14 day window gets you penalized in most cases if you decide to cancel.
Got it. Okay. So again, by putting systems and everything in place, you protect yourself from that happening. So what about, who makes the decision? Is it yourself or the owner? And what's the process of making a decision, like how much you're going to charge per night on the unit? Is there some sort of a Airbnb comms that you can take a look at what somebody else is renting? Like, what's the process?
Yeah, so for us, again, like this becomes a matter of understanding your numbers, and it all starts with understanding how much it costs you to operate your unit on a monthly basis. So we've got this pretty unique calculator, a pricing tool that we built in-house, and we use it to price our units and also our investors. And what that tool does is it takes our monthly expenses, and then it calculates our pass-through fees, the Airbnb service fees or whatever platform service fees, along with the cleaning fees, and it gives us our total operating expenses for a month. We then tie that into our profit margin projections and our occupancy rate projections for that given month. Then what the tool does is it gives us a recommended nightly rate based on those numbers. So then we know exactly how much it costs us to operate daily. In turn, we price based on hitting those target rates. And then what we do from that point is we do look at sites that give you aggregated market data. And let me back up for a second. So this really just becomes about understanding how to price your unit, because what happens is in a given city or zip code, you're going to have, let's just say, 1,000 Airbnbs. But the reality of it is that if you rely on just aggregated market data, then you're either going to be overpriced or underpriced, but you'll never hit your target price. So as I see it, most people get into the neighborhood, they get onto the street, but they never get to the right house, right? And that's because just using aggregated market data by checking Airbnb and seeing who's priced where around you, or using wheelhouse of price labs, doesn't necessarily get you to your own numbers. And what does that mean in terms of your nightly price? Because every other homeowner has a different monthly cost, which means they have a different daily cost to operate their units, which means they should have a different daily rate that's tied specifically to their property. So we do check aggregated market data from Airbnb and AirDNA, and that's part of what's built into the tool. So once you plug in your number specifically, you'll get your recommended nightly rate. And then also there are two sections below that, and I know we can't see anything, so I'm just kind of explaining here in air. But what we did was we put in a place where you can go in AirDNA or your pricing tool and put in their recommended price, and then against your recommended targeted price based on your numbers, you can see where you're priced. Then you're able to adjust from there. But at a minimum, the takeaway being that regardless of where you price per night, we want you to understand how much you are making per night and what your numbers mean, not only near term, but midterm and also long term.
Okay, got it. So again, thanks for providing this much, great information again, because I told you, like, I'm green in this space. Like, I don't know, I don't have a clue about the Airbnb, but, it sounds like it's, again, for you're doing this successfully. Like, I don't know, from an investor standpoint, which it sounds like, your investors are happy. If you won't be having 50, properties that you're having currently, but the question is, like, what type of advice would you give for somebody, again, who would be looking to do Airbnb? Like, what's the process, like first step to get involved, like, into this type of business?
Well, I tell you, the first step would be to reach out to us, right? Because,
That's it, yeah.
But a lot of experience in the market, and then, we're just able to provide a unique perspective on Airbnb, and whether it's domestically or internationally. We've consulted guests as far away as Australia on the acquisition of units, and the reality of it is the central problem that exists doesn't change no matter where you are. So a homeowner in Australia that's renting a property is no different than a homeowner in New York that's renting a property, right? So we help investors understand that, or folks that want to get into the rental arbitrage business understand that where the central problem exists, and then how do you shape your message around that to have that conversation with homeowners. And that again gets back into the source acquisition portion of it. But once that happens, then we move into the build phase, and then for investors, helping them understand, hey, what does it take for me to, once the home's under contract, we do a short-term rental addendum to the lease agreement. What does that process look like to build a unit out from end to end? And we walk through that through a Microsoft task list, which is part of a workflow where we bring investors in and add them to the task list, and then assign them tasks to take care of and stuff that we take care of. But it becomes a working team workflow through the task list to get us through from acquisition all the way through the first guest arriving after the guy that's taking pictures departs out of the door. So.
Yeah, I love that you have everything in place to make sure that it's kind of a hands-off experience for all the investors. Because again, the question, like I seen, like previously when you like go on YouTube and you just see all these, like how to start your Airbnb business, you Google and you're gonna find, you will probably get confused more than educated, because there's so many different people selling. Again, it's the same principles would be, but
Mhm.
what do you think, like for a person who's looking to get involved? I mean, it sounds like it's a lot of work. And like, what mistakes have you been, if somebody's still going to say like, Alvin, like your company is doing great, but like, I want to be my own like guy. I want to just run my own thing and whatever, whatever sense
Mhm.
they make. And like, what mistakes do you see that people make when they do Airbnb themselves?
I would have given you a different answer a year ago, but today, understanding where we started versus where we've come, and then understanding where investors currently are in the market, the mistake, the fundamental mistake that most hosts make is not getting into Airbnb to grow a business. And what happens is we are within Airbnb, I say we, but Airbnb is growing into a more professional construct, just in case that's breaking news for anyone. And what's going to happen as a result of that is some of that's going to be passed down to host to increase the standard of what you're doing. So those that are just simply operating in Airbnb versus those that are in the market to grow a business becomes an initial failure point. And that gets back to one, having a system and process in place to acquire and then build out units that add value. And then two, the center of gravity really becomes about pricing. And I know I walked through some of the ways that we price units, but at the end of the day, if a host doesn't understand their numbers, they won't understand how to grow their business from a financial standpoint, which then ultimately leads you into price wars. And we know we can line up every Airbnb on the street, and if they're in a price war, then it's just a race to the bottom at that point, right? Who's going to get to the bottom fastest, and then you're just going to start seeing folks bottom out. And again, so those that get into price wars will eventually lose out, and those of us that are operating professionally in terms of pricing and in terms of adding value and then unique value, more specifically within the sharing economy as a whole, will be the ones that will survive the professional approach as we see it.
Okay, so talking about survival, I have another question here, for you, because I'm thinking again, like talking with a lot of these different, investors in all these different asset classes, like some of those asset classes saying like, no, we're gonna survive. And what I mean by that, everybody's talking about upcoming, market crash, and like again, as I mentioned, like I don't have a clue what's going on with Airbnb business, but like how do you position for that? Because again, like if you know that's going to happen, like nobody has a crystal ball, nobody knows when, but is
Mhm.
there a way to position yourself from your company standpoint to like mitigate the risk when it comes to vacancies, increasing the vacancies, and just people not renting?
Yeah, great question, and that's where I'll get back to the sharing economy aspect of what we do, right? So a great example would be each new home that we take in, we assess a home's ability to operate in a sharing economy, right? So I want a home to be able to have a rental car through Toro on site, available, offered to guests to add transportation needs. I want to be tied into a local chef that's providing freelance chef services to be able to add to guest experience. I want to build out a property where a portion of that property, and follow me here. It's for Airbnb, meaning maybe they're 3 bedrooms, but 2 of them are guest bedrooms for sleeping, and then we use the third bedroom as a small meeting space and combined with a small photo studio space. So then I have the capacity to leverage that space through Peerspace or Spaceler by offering events to locals, and then also small team meetings or meetup engagements to local businesses through Peerspace. And when you start to look at the number of shared economy services that exist and how you're able to tie that efficiently into a home, then you start operating in a different capacity. And then when we start to have the conversation around occupancy rates and some of the risks that are involved with taking on long-term contracts, we mitigate that risk really through operating in the sharing economy and bringing in multiple streams of income to a property and really showing the ability to have outsized returns, not only through Airbnb, but just by operating within the realm of the sharing economy.
That's a very interesting approach. I love it. So, that's definitely going to help you to mitigate the risks, and for all the investors, because again, there's a lot of people concerned, like what's going to happen. So that is awesome. I love the strategy. So again, coming back to the, self-education, because again, being active in the military still. So for the people who are looking to get involved into real estate, whatever that might be, Airbnb, like construction, just in real estate in general, like, because it involves to have this business type of mindset, which they don't teach in school, college, universities, and you get some of that in military, I'm sure, but what type of business books besides Robert Kiyosaki, Rich Dad Poor Dad, would you recommend for people to read? Just 3 of those.
So I am huge on taxes, right? And there's a book, I keep it here by my desk, right? And I'll hold it up here. So the Savvy Real Estate Investors, or the book on savvy real estate investors, or tax strategies for savvy real estate investors.
Who's the
Amanda Hahn and Matthew McFarland.
Okay.
Through Bigger Pockets, one of the Bigger Pockets published books. But
yep.
Taxes for me are the center of gravity, and you can't have a successful business without understanding the tax implications, right? And that's another failure point. I get back to the previous question about what hosts should understand, but taxes and structure, because if you're looking to grow a business professionally, then at some point you're going to have a conversation about taxes and your structure, and then what does it mean to go from a C corp to an S corp from a tax standpoint. So understanding taxes to me becomes the central point, central focus within growing a business.
Got it. So what would be the other 2 books that which you recommend for people beside the taxes? What is there?
I would say let's not get back to Rich Dad Poor Dad. I've got a couple of them here actually. You put me in a bad position here, so I don't want to throw any Airbnb specific books out there, because I've proven them all wrong at this point.
I love it. Yeah. It's through experience you find out, like, some of those books they don't work. Some of those people, they just write the books just to write the books, right?
Yeah, and I've got a bevy of books on the bookshelf, and not all of them are financial related, but again, just basic real estate books, and then understanding taxes before you go into building a business. I think it's key.
Okay, so can we just talk about the taxes before we're going to transition to that? Like, how is that different tax-wise, like, from any other investment? Like, if somebody's having like multifamily, that's going to be different construction. Like, tax-wise, how is it even looking like for a person? Like, how is the structure?
Right, and that therein lies the beauty of short-term rentals, because it's a completely passive activity, right? So On the surface, 100% of your expenses go into the loss column with this. And you think about it from a hospitality standpoint, and the uh, two areas of taxes. It's either ordinary or it's necessary, right? But in the case where you're operating short-term rentals, and then more specifically in this business, you can have a guest that directly impacts your ability to make money if they show up and say, hey, there are no fried green tomatoes here, and there's not ESPN the magazine or Netflix. They can then arbitrarily leave you a one-star review that then directly impacts your ability to make money. So when you understand that the nature of this business from a hospitality standpoint, is it ordinary? Yes. Is it necessary? Absolutely it is, because I'm providing a guest experience. So when you think about that again, and you're building out a property, you understand one, where the items that you're going to purchase that have a depreciation value, and then everything else that's going to add guest experience. But what we figured is really a price point for every investment we go into, and I'll say on average a three-bedroom home, we take somewhere between a $45,000 to $50,000 hit from a loss standpoint, just by opening a unit, and that's just an aggregated cost estimate over the course of a year across all the expenses. So all the utilities, some of your maintenance costs, your cleaning fees, everything you can throw into the bucket goes into the loss column. So we know going in, I'm going to take a $50,000 hit here. Now think about that when you do 20 or 25 properties in 12 months, right?
Yeah.
That becomes a pretty significant hit. And now, because you're doing a completely passive activity, some of that moves to from Schedule E to Schedule C. And although Schedule C is taxed differently, Schedule C losses help offset some of your taxable W-2 income. So understanding taxes and understanding business from that standpoint, if I give you in one scenario that the investor that doesn't understand taxes and they're not getting all their losses and everything's filed on Schedule E, versus an investor that does understand it and they're scaling because they understand losses mean from a tax perspective, and they're filed on Schedule C, and then you'll get two totally different investors operating in the same business. But one that's growing a business through taxes, and then another that's fumbling through the business.
Yeah, well, yeah, it's definitely taxes is a big thing. Like, I don't know how it works in the States. Again, I'm not from there, except the flag that I have hanging next to me. So, but I know, like, multifamily, particularly, like, we have a lot of people coming in from multifamily space, and these people love taxes. They love tax advantages, and like Airbnb is no different. I mean, it's real estate in general. So thanks for the book's recommendation. Thanks for importance of mentioning of taxes, and you need to get educated on that. So specifically to your business and to expanding that, maybe you can share a few business goals that you're planning to get accomplished this year.
Yeah, great question. So for us, we're looking to grow into the partner host portion of the business, where we're taking on a lot more consultation and helping short-term rental investors out there have a business approach. So we want to dump co-host, we want to get co-host out, and we want to put partner host in. And as I alluded to co-host help you manage, and partner host help you grow your business. And I think that's what everybody's here to do. So that a lot of the focus this year will be on small growth on the property acquisition side, mostly focused on good real estate where we can add tremendous value in spaces that we can potentially host bigger events like weddings and some other events. And then a large portion focused on consultation and some of our partner hosting services. And then the third part of that is really growing the shared economy aspect to the business, and not only to new inventory, but to existing inventory, starting to add some of those services to existing locations that are even in smaller markets. But again, we're walking in the sharing economy, so we're going to bring all that to you within the construct of your Airbnb experience.
Okay, love it, love it. Some great goals for this year, which I'm sure you're going to accomplish and go beyond that. So for the people who are looking and they're thinking about getting involved in the Airbnb or maybe renting, you know, some of the stuff, just pass it on to you, because it sounds like it's a lot of work and you have to educate yourself, which what you mentioned, some of the books, they don't even give you the right education. Like what will be those social media platforms that people can go and connect with you?
Yeah, so we're on Facebook. Your Space STR, all one word, should bring us up. Also on Twitter, we have an Etsy store shop. If you follow Etsy, it's Your Space STR in the search function. The website, www.yourspacestr.com, will get you to our platform that has a number of the services and also some of the really unique and specific sharing economy products that we built in-house and we purposed out on the website for investors to go in and take part of. And then also the YouTube channel. Again, if you search Your Space STR, you'll find some of our explainer videos for not only the pricing tool. So the website's located at www.yourspacestr.com, where we have all the services that I talked about, in addition to the pricing tool and some other unique short-term rental arbitrage specific products that we've built in-house that are offered on the website. We also have a YouTube channel that has some content, not a lot of the videos and meetups that we do. Those are currently being packaged for, of course, at some point. But Your Space STR YouTube channel, you'll see a lot of the explainer videos and also some of the videos that are associated with the homes that we've built out. We have an Etsy store shop with some of our products. If you search Etsy at Your Space STR, it should bring the store up. Facebook, Your Space STR, will get you to our page. And I also have an investors page on Facebook that's creating Airbnb and sharing economy investors, specifically for folks that want to get into this from an investor standpoint and not, a site about a million opinions on how to handle cash. We focus on the investment side of things there, and we'll leave everything else to everyone else. And lastly, on Twitter, Your Space should get you there and connect. And I think Instagram, it's ys.str will find you on Instagram.
And of course, probably you're in bigger pockets as well, but judging by the book.
Yes, but not in large through the short-term rental forms. And it's just sometimes due to sheer volume of information. You ask a question and you get a million opinions, and it's hard to figure out what's the truth. So
yeah.
Time is money.
Definitely, I agree. So again, guys, you're going to find all the links down below. If you just click on those and get in contact with Alvin, ask some questions, of course, do your due diligence before and go and ask, because this is a busy man. He's running places, building the business and, helping investors to get great returns with their Airbnb properties as well. So, I'm just very happy to have you today on the show. I learned a ton about, I feel I'm less greener now, after I spoke with you. So that's a good sign.
And you're ready to hop in, right?
Yeah, because it's good. I mean, it's very interesting space. There's a lot of people going towards that, and but I was just seeing from kind of a, one person managing few properties by themselves, but there's a way actually to build the business with your help, which I like, which is a good sign. So again, guys, if you're interested into that, go and click the links, get in contact with him. If you're from Atlanta, go and check it out. Airbnb rental arbitrage meetup. That's going to be coming up. You mentioned 2 times a month you do that. So man, it's just a pleasure, guys. Again, if you enjoyed the show, you know what to do. Click, subscribe to the channel. Go and check it out. Alvin's YouTube as well, where you're going to find a lot of free content. I've seen some videos like 1 hour and long. So, you know, there's great content that he provides. And, you know, as always, guys, I'm going to see you on the next episode. And Alvin, big pleasure. And thanks for doing this. Appreciate you.
Thanks for having me.
Thank you. Thank you. Guys, I'll see you on the next episode. Thanks.